All right, we're gonna get started here. For anyone who doesn't know me, I'm Dodgy. I'm not a financial advisor. This is not financial advice. Um, you guys get the deal. Um, so today's class, I'm gonna kind of brush up on some. It's kind of like doing housekeeping things. I've done a lot of really good classes in the last 2 months. Tonight there are a few things I want to talk about. I want to talk about what a bad example of an inverse looks like, and why I have my rules and what I do for the inverses. Because some people ask me like, "Oh, why do you have a rule like not to take this for the inverse?" So that's gonna be the first thing, and then the other thing is how to know when we're not gonna get bad, or how to know when we're gonna get bad PA. Okay, and I say bad PA in quotes because I could go to the 15-second time frame, and I guarantee you I could trade with bad PA every single day of the week, every 30 minutes. Okay, for me, there's not really any such thing as bad PA per se. Um, but there is times where the 5 minute or the 1 minute will present no fair value gaps. Okay, and if the 5 minute or 1 minute is not presenting any fair value gaps, that's going to be bad PA for a lot of people, because if there's no fair value gap and no kind of entries, how and no displacement, okay, how are you going to enter? Okay, for example, like just looking at this from Friday, right? There's not really any displacement over any of these highs, like this one, this one, this one. Okay, and it's just not gonna make for an easy. It's not gonna make for easy trading or easy to execute, because there's not really any displacement. There's no displacement over high, right? You don't know if you should enter the 0.705. You don't know if you should enter a fair value gap, especially if there are none, whatever it may be. But again, like I said, you could probably go to the 15-second and find a setup right here. I guarantee you right here, this is a setup on the 15-second. We swept this low, get a setup here. Um, so yeah, the other thing I do want to say is very clear draw on liquidity for oil right now. I kind of talked about if we get a pullback last week, I would have entered here, but we never did. So I think we're just going to accelerate right to buy side. Okay, as it's just a nice really market make your buy model. All right, so I'm going to be talking about some bad inverses. Okay, so as you all know, I have that rule that I don't like to take singular inverses. Okay, I'm going to find a few examples to show you why. One thing I do want to go over first is just Friday's price action real quick. Friday was not the easiest if you didn't get in early. Okay, if you did not short that open, was not very easy. Okay, the only reason, so I was on live stream and I kind of was talking about, I was like, okay, we got this at open, this fair value gap right here, and it had a lot of displacement, but a lot of the people in my stream are gonna think the stop loss is way too big for something like this. And if the stop loss is too big, well, I don't want you newer traders who don't know how to manage your risk. Meaning, it doesn't really matter how big the stop loss is, but some new people don't know how to manage the risk. So that's why I don't really like to alert these things, especially the giant stop loss. Right, the stop loss would be above the swing high. Okay, only reason is because it's a 3 candle series. One, then you got the fair value gap, then you got this. So in this case, the swing high is just a really good stop loss, because that fair value gap, if price is bearish, we will not go above that swing high. But you're gonna see the stop loss is pretty major. So I didn't really want to alert any of the new members. Same thing with like right here too. And I kind of saw the reaction to this. Ended up taking a short like right here. And I don't even know where I covered it. But if you didn't catch that move, it was kind of not the easiest trading this right here. Okay, I will admit. Like I said, if you go on the 15-second time frame, there's probably some setups. But when we were kind of getting this price action, my first thought was, okay, look for some sort of pullback for an entry here. I was hoping we're gonna kind of break this low resistance liquidity, right? You got a lot of stops resting, just in all sorts of places, right? It kind of creates this low resistance liquidity. A lot of stops resting up here. So I was kind of looking for something like this, and we just didn't get it. We just kept going down and down and down. And the one thing I do want to point out with this right here is this setup, this inverse setup did fail. Okay, if you look very closely, it did fail. Okay, you can see right here we have low resistance liquidity above, and you get the singular inverse. Okay, and it's closed above right here, and you get this retest, but we never go to the swing high, so you never really get the chance to move your stop to break even, because when we close above this, to me, I took this and I was like, I kind of alerted this in my stream, and I'm like, okay, this doesn't look bad. I only took it on demo because I was already so green, and we were kind of, I didn't really like these candles. We were just kind of consolidating, and I was telling people, I'm like, okay, if you just missed to move it open, okay, you just saw a whole bunch of expansion, okay? If you know ICT and the 4 price cycles, okay, we get expansion, then consolidation usually after. And typically you want to trade, if you see us consolidating for a while, you want to start looking for a trade at the end of that consolidation phase, okay? And the only reason I say that is because if we're really consolidating, a lot of traders will be like, oh, don't trade this, don't trade this. But that's when I do look for a trade, because I know we're probably going to expand again soon, or reverse, or whatever it may be. So this does meet all their criteria, okay, for my inverse. It's a singular fair value gap. Okay, we close above it. Here's a retest. You're targeting here and then up here. When we hit here, you move your stop to break even, and this clearly gets stopped out. Okay, and in hindsight, the only reason I would say did get stopped out was because there was the CPI low right here. Okay, and if you've been in my streams before, or you've been with me for more than a year, okay, how many times have you guys heard me talk about how important the CPI or data highs and lows are? Type 1 if you've heard me talk about how important they are. Do I not mention it literally every single time we have news, right, for people in my live stream? So again, that's something I mention a lot, these CPI highs and lows, NFP highs and lows. And what happens at these highs and lows is, from an order flow perspective, there's a lot of these orders sitting there that don't actually get filled. Okay, have you ever seen a big CPI wick above and then we just wick down like this in like 2 seconds? Okay, if you look at like a footprint chart or the order flow chart, there's orders at this high that are not actually getting filled. There's like a little void, okay, in the market that goes to fill these voids, and that's why I treat these data highs and lows so important and as really good pools of liquidity, because I very rarely not seen us hit a data high and low after it comes out. Very rarely. We hit every single one. So like if we have the data high and data low, I'll be like, okay, if we hit the data high, look for a short down back to the data low. Okay, and I don't really talk about this on Twitter a lot, but that's something I really like doing, and it's something that people who have been on my live stream have really kind of see me do, okay? And I always talk about it. Leopard talks about it. So when you see momentum like this, okay, just straight momentum like this, even if you miss this short, in hindsight, when you see the momentum here and you see this untapped data low from Wednesday, 8 a.m., okay, when we had CPI, okay, that's almost a like guarantee we're going to go hit it because of a screen time, okay? It's none other than screen time, okay? I know how much the market cares about these data highs and lows, especially after seeing an hourly candle like this, okay? We're not really bound to get any retracements. Again, I was looking for one, never got one. Okay, end result was the same. It was a data low, and that's kind of what ICT called out as well. So I think that was the big thing on Friday and why those kind of inverses didn't work. And there's always going to be a time where you take a textbook inverse and, oh, we have sell side below, so it's going to fail, something like this. Okay, but most of the time, this will not fail. Usually, most of the time, we'll go like this, and then it'll go down. Okay, this is just a rare occasion where it doesn't hit. So I know for the people who did take this play Friday, again, wasn't really a bad play at all. I felt like we did take enough internal liquidity. I always say, like, when we take out these lows, even if I think there's a low down here, oh, this is sell side, we have to hit it, I'll still long, okay? I don't care. We already took out this low. I don't care about this low at this point. I'm still looking for a retracement long, and if I see the setup, I'll trade it, right? If I see if there's a siren going off my head, okay, siren of, oh, this is a perfect model, I'm gonna take it, even though it's kind of against where I think sell side is. Okay, and you see us dump all this way. Okay, typically we will get a retracement. Okay, and this is just, I'll show you a really good example. Okay, here's sell side right here. Okay, if we go to the, this is right here. If we go like right here, here's sell side. And then we kind of get this little setup right here. Okay, beautiful inverse. Okay, or beautiful BPR. And I know he didn't hit sell side, and I know he didn't take out this low. But you're going to, like, look how much we just expanded down. Okay, when have you just seen us just knife down, 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 with no retracement whatsoever? Okay, most of the time, okay, especially after something like this, okay, unless it was COVID and we were super bullish out there where we got no retracements, typically you'll see us retrace a decent amount. And there are traders who do counter trend scalp this, okay, and I kind of do the same thing, right? Here's a setup, here's a BPR, here's what I teach. Okay, and we go up and we take out all this engineered liquidity. Okay, you can just see how many kind of high stacked up here. High here, high here, high here, high here, high here. So a lot of liquidity is sitting up there. So you're gonna see these setups where, yeah, maybe we haven't hit sell side, and you're gonna see them work to the opposite way. Okay, and even though I do take a setup like this, do I hold runners for like a setup like this? If I think there's sell side below and I see a long setup, am I going to really hold or try to hold for a home run? Yes or no? Yeah, 2 equals, by the way, 2 equals no, 1 equals us. So exactly, no. If I think there's still sell side below, okay, I'll take this long gladly. This is a great trade. I don't care what anyone says. This is a great trade, especially to the long side, even though I think there's sell side below. And what makes this a great trade is I'm not trying to hold till way up here because I know the bias isn't bullish at that point. I'm just holding to where, okay, if we are bearish still, I know we're going to hit like this high or whatever, and I just get out my full position. Okay, like that's still a great trade. And there's times where I'm bearish, but I see the model going the other way. And this is the benefit of just kind of trading in the model I teach, because you can take those counter trend scalps and then take it the other way, then take it the other way, then take it the other way, okay? I know bias is important, but you will see that a lot in this market, okay? Now, there are some traders who, they will not take the setup, okay? They know we have to hit sell side down here, and they know this is going to be a 70% win rate instead of like a 90, 100% win rate, right? If we did take sell side here, I'd consider this a 90 to 100% win rate. Because we did not take sell side here, I'd still consider this at like a 70% win rate, which is still very high, okay? Very high, better than the average trader, okay? But the point is, you're going to get these setups where you haven't hit where maybe the draw is, but you'll still get these inverse setups that they'll work really nicely. Also, I want to show you the difference from right here. Okay, I'm just going to ask you guys something. So we have sell side right here, okay? This is a very important lesson, by the way. We have sell side right here. I'm going to play some candles. Okay. Is anyone interested in longing here with this single high sitting above here? Type yes or no. 1 for yes, 2 for no. Okay, so most people are saying no. Okay. Why would you not be interested in longing? Okay. I think the obvious answer is we have sell side below, so why would you long? Okay, now I'm going to play a few more candles, okay? And you're going to kind of watch price and be like, okay, no, this is kind of choppy. I'm going to watch price. Okay, you now see a potential inverse right here. Okay, why is this potential inverse? Because it's a singular fair value gap and we purchased low. Okay, so I'm going to play price. You see, oh, we broke over the inverse. Okay. Well, I know we at least have to hit here, okay, which we do. So we do. Okay, but Now, would you be interested in longing? Okay. Would you be interested in longing right here? Exactly this candle, exactly where this candle is. No, okay? And you're going to, when I get to the end of this, okay, you're going to realize what I'm trying to say here. So still no, and I agree with that. Nothing about this price looks enticing to me. I see we did take out a low, but I know we still have sell side below in the higher time frame. Okay, now I'm going to play some more candles, right? Ready? It's all going to come together in a second. I'm going to play some candles. I'm going to play some candles, play some candles. All right. Now here's where it's all going to click. On this candle, okay, we're going to go down right here. You weren't interested in longing here, and you all said you weren't interested in longing here. Based off this price action, even though we haven't had sell side, does it a long here look more enticing to you? If you're saying yes, tell me why, and if you're saying no, tell me why. Does a long here look more enticing after I play like another 15 minutes worth of candles? Not on this candle, but to look for a long setup in itself. Okay, I'm not talking about longing this candle. I'm talking about just looking for a long setup in general here, even though we haven't looked sell side. Even though we haven't hit sell side. Does it look more enticing here than it did over here? That's my question. Does it look more enticing here to look for a long setup? And if so, why? Yes, exactly. Perfect. All right, you guys got it. So, Reliable got it. So, what's the difference when I go here? Okay, if I'm expecting price to retrace after we expanded down a lot, okay, if I'm expecting price to retrace, is anything in price here telling me we're going to retrace? Anything at all? Not really, right? Now, if I play these candles, okay, and look at these candles, is what in price right at this specific moment is telling me, okay, maybe now I think we're going to retrace. What changed in the 15 minutes? Yeah, exactly. Now there's like a quad top. There's just so much engine liquidity. So you can see if you're tape reading this, you're like, oh, this price actually looks trash, looks trash, looks trash. And then you're like, all right, I still haven't taken a trade, but we've created a ton of highs kind of at the same area. Now, okay, I know we haven't hit sell side, but now you're maybe thinking, okay, well, we haven't hit sell side. We're very low on the higher time frame. I see all these highs. Maybe now I'm going to look for a long setup to maybe hit these highs before we hit sell side, because when you get all this low resistance liquidity and just all this engineered liquidity right here, okay, you can see how a clear 15 minutes of candle changes, right? Me changing 15 minutes just kind of changes their opinion here. Okay, and that's just really important because you're going to be tapering. You're going to be like, oh, this isn't looking interesting. This isn't looking interesting. And then 20 minutes later, you're like, all right, now we're forming something, right? Now we're entering into this liquidity. Now we have a long setup maybe in the works. Okay, and that's when you get like a confirmation setup right here. This is your confirmation setup if you don't blindly set up this. And then you get that confirmation set up. And then we go back to buy side and you're like, all right, well, nice play. I know we're probably going to hit sell side now. We took out all this engine liquidity. But I think the lesson here is you're going to be tape reading. There's going to be times where, yeah, you're not interested in price, but then you're going to see a bunch of engineer tops, whatever it may be, telling you kind of a different story. But it's going to take time to play out, okay? And that's why I kind of expect to retrace here and not right here, because nothing here is interesting to me. But then it got interesting when, okay, now you see all this engineering liquidity. Okay, and again, I would consider this setup a pretty high win rate, even though we haven't hit sell side. Okay, now this setup, I would not. I would say this is like a 60-70% win rate. This setup, 80-90 for sure. And that's only because it gave me the confirmation setup after a delivery out of a BPR. I don't know, it's just me. And then you can see we end up hitting sell side later. We hit sell side later, and then you can see that once we hit sell side, okay, you look for the single fair value gap. Are any of these single fair value gaps right here? Any of these? Yeah, exactly. Okay, if they're why do I not take these? Okay, look at. So if you can see right here, right, we got a fair value gap, another fair value gap, another fair value gap. Okay, if we close over this first fair value gap, which we do here, do I really know if we're going to close above the rest of these? No, I don't. Okay, so the problem with this right here is, again, you can see, oh, we close above this, but we still got this up here, we still got this up here, right? We don't know if we're going to keep going and closing above. So this is a bad example of an inverse setup because, yes, we did hit sell side, which I do like, but you kind of got, okay, we have a break handle here. We have not closed above any of these fair value gaps. We're kind of gambling at this point. If you're taking along here, you're like, oh, I bet you we're going to close over these, but you really don't know until they are. And at least with a single fair value gap, you don't have any fair value gaps above to worry about. Okay. Now, what if you go right here? Okay. This is a super obvious, just singular fair value gap. We get the displacement close above. Really nice BPR. Okay, the BPR is sitting right here. So this is just super obvious. Okay. There's no bearish fair value gap up until here you have to worry about. So if you're longing here, right, and I'm in replay mode and you're longing here, I at least know we have to go here. We have to go to that fair value gap, which we do. And then after, yeah, maybe I'll hold runner, see if it get higher. But I'm out the majority of my position here because I'm trying to take the guarantee. I'm trying to take okay, I know we at least have to go here. If I think there's a potential chance of reversal, I'll try to hold runners. Because of screen time, I actually would not hold runners here. Okay, the reason being was because it was a trend day on Friday. And when a Friday is a trend day up until 1 or 2 o'clock, we're not going to reverse. Okay. That's just something I learned in screen time. We're not going to have a big reversal. And that's just the thing that happens on Fridays, not any other day of the week. And that's just, again, based off of experience. So really right here, I wouldn't have held runners because of that. If it was a Thursday, I would have 100% held runners here. Thursday, Wednesday, any other day of the week I would have. If you had two different time frames, for example, 5 minutes and 15 minutes, would you take the trade on the time frame of the better RR? I would have to wait for the 15-minute one. And then I look for the lower time frame confirmation. Because if we close above the 5-minute, that means there could still possibly 10 more minutes till the 15-minute candle close. So you don't know if it's going to close over or not. So that's my answer to that. And again, you're going to see that was another nice retracement and then back down again because we know Friday's a trend day. And let me just finish off with chop, which by that point you should have been satisfied. So really no reason to trade this. In hindsight, you can be like, oh, there was an inverse here. Okay, but what's wrong with this one? There's also this here. So too many variables on this leg to play with, in my opinion. And then right here we end. Not great price action here, obviously. So yeah, that was kind of Friday. Hopefully you guys learned at least one thing from that kind of review. I'm hoping you guys, this was the really good thing. This is the gem, right? Kind of how 15 minutes of candles can kind of change your perspective, right? I'm in multiple chats, I'm in multiple discords, I'm in so many things. And I'll see someone do like, oh, I'm looking for short to the sell side. 15 minutes later, they change their mind. They're like, never mind. Something in the chart changed. Oh, now we got a bunch of entering liquidity to the upside. I'm not looking to go shorter anymore. I'm going to look for a long setup instead, right? And I've seen that happen so many times. And if you're trade ICT, that's just bound to happen a decent amount. So, and that's okay. Okay, I do that a lot. Okay, there's been times where I go in bullish for the day, but then I see, oh, we created a perfect equal lows. I'm now bearish, right? There's gonna be factors that appear in live time that's gonna make you change your mind. Okay, all right, and I've seen that just happen to a lot of people. So, that is that. Okay, the other thing I did want to go over. Yeah, just screen time reliable. I can't explain it. So the other thing I want to go over is kind of how to kind of see if we're going to get bad price action or not. The big one is Monday, no news days. Almost 90% of the time, you're not going to get volatile price action. Okay, Monday, no news days. That's really the big one, I would say. Two would be morning before FOMC. 3 would be day before CPI. 4 would be Wednesday afternoon. Thursday before NFP. What's another one? I think that's it for now. PPI, consumer sentiment. These won't affect price that much before. Trading before these, I've traded before and I've been fine. Sometimes ICT says don't trade before, but I've been fine between stuff like this. But it's really CPI, FOMC, NFP. Wednesday afternoon because screen time. Again, price gets on NFP weeks. Wednesday afternoon is typically when I start seeing price start to lag and to slow down. In my eyes. So I think these are the 4 big ones, honestly. Okay, now let's say it's just a random day and we want to identify it early. Maybe it's just a random day. The first 5 minutes of open, the first 10 minutes of open, if I don't see any fair value gaps in the first 5 or 10 minutes of open, that's another factor. Okay, does that make sense, everyone? How if we don't get a fair value gap, let's say the first 10 minutes of open, it's always going to be ish, okay, 10-ish. But if we don't get a fair value gap on the 1 or 5 minute, if we don't get a fair value gap at the 1 minute in the first 10 minutes of open, typically it's not, you don't want to trade that. If we don't get a fair value gap in the first 20, 25 minutes at open on the 5 minute chart, typically you don't want to trade that. So those are kind of my 2 deciding factors. Okay, 10 minutes, no fair value gap in the 1 minute, not really good at price action. I wouldn't say, oh, wait for PM just yet. I'd kind of stay another 15 minutes, see if anything changes, seeing if we get displacement over highs and lows. And then that's where, okay, if we're not getting, maybe now we started to get a couple of fair value gaps and you're like, okay, great, but we're not displacing over any highs and lows. Yeah, I'm done till PM session at that point. I'm not trading. So that's the big thing with me. But yeah, that's the big thing. These are the 4 kind of days. Price will be very good 15% of the time for these days. The other 85% is going to be trash. So if you do see good price action on these days, who cares? It's not going to be like that every single time. What days do I not trade at all? These 4 days I don't trade at all, no matter what happens. Well, no, wait. Monday, no news days, I will trade. Mondays or morning before FOMC, days before CPI, and then this, I'll just demo trade these three. This one, depends. Depends on if we're displacing above old highs and old lows and getting fair value gaps. And then I trade on PPI, consumer sentiment days before those days, whatever it may be. Oh, and then speakers. Major speakers, I'll only demo if we have like a major speaker. So yeah, I think that's it, honestly. I'll go over how to use. I'm actually gonna do an experiment this week. In my live stream this week for my premium, I'm gonna try the thing ICT said, going a 30-second chart after 5-minute high or low is taken, and I'm gonna look for I'm gonna try that. Yeah, we'll see how it does. If you want to watch, I do have a promo running right now. Code Dodgy, 30% off. I probably won't do a free live stream for another week or two because I got a lot of work. So, can you care about when you would and wouldn't care about opposing fair value gap right above / below your entry? It's really when we hit sell side. Like, let's say this is sell side. I typically don't care about an overhead fair value gap if I know we just take out major sell side. If we have not taken out a major sell side in like 15-minute, 1 hour, 4 hour daily, whatever it is, every other time I be like, oh, there's a bearish fair value gap here. What if we reject it? That's when I care. But if I know we really just displaced under sell side and displaced right back up and shot right back up, okay, I don't really care about opposing fair value gaps. Does that make sense? We had to have had hit some major sell side for me not to care about the opposite fair value gaps, because I just know they're probably going to be broken anyways. Yeah, from the 15-minute up. Oh yeah, that's fine too. If we're delivering, yeah. Nah, it has to be low or high. I would say if we're delivering from a PD array, they matter more to me. I would say low or high only. I use Tradeify and Ninja Trader. All right, I think that's gonna be it for right now. Bilal took that loss right there. See, Bilal, that was not a bad loss to take at all. I think we never hit that sell side though. I don't think. What time was that up? 2 o'clock. Yeah, we still had sell side below. That was Friday, right? Yeah, I don't know. That's not a bad loss, in my opinion. For that, I'll just say you're trading the higher drawn liquidity, which at the end of the day, the higher drawn liquidity is going to matter the most. which obviously is not going to take you one day to master finding. So, all right, I think that's going to be it for now. Appreciate you guys coming. Don't think I have anything else. And yeah, I'll see you guys later. Peace. Yeah, what's up, Devin? Hurry before I go. Yeah, it goes BPRs, IFEGs, fair value gaps, then order blocks. And yeah. Actually, no, breaker blocks before fair value gaps, then fair value gaps, then order blocks. I wake up an hour before open. All right, goodbye. Peace. Let me know if you have any questions. Just shoot me a DM. All right, bye.